a service-based business? Are they a client-based business? Or are they, retail or online sales? So this rule really comes more towards clients, like client-based businesses, people-based businesses. Do they have employees? Is there a bigger staff? Things of that nature. There has to be something within their business that would even create the opportunity to have an event. So that's how you kind of need to first filter who you would even bring this up to. And, are they a local company, nationwide company? Is it all online? Do they have physical presence? Things of that nature. And then, so if they make that first filter and be like, okay, they could actually have an event at their house, then yes, the company could rent the house, from the individual to have an event. But even on that one, you're only talking one day. So, as far as on these, internet schemes and things of that nature, most of the stuff that they put on there, you can't even get more than 1 or 2 days of rental. So what are we really talking about here? So that's the big difference is, like, yes, you could do it for 13 days, but there's no real plausible situation where you would. And so if they make it through the first filter and they could at least have an event, but you're also talking over the span of the whole year. So if they could have like a quarterly event at their house, or, if they're realtors, for them, though, if they're having, like client appreciation things at their house once a month, then you can get, 12 events out of it. So that's where you could get, multiple events on it. And then you got to look at the market rate of what it would cost to rent, similar size or space to have an event. So you got to, have some type of justification for the, event, the space fee that you're actually paying for. And so once you can get that determination, probably between $800 to $1,500 maybe. So depending on the client and everything else, and that's where from these things is how much time are you going to put in, to get $1,000 deduction, not too much if they can only do an annual, but if it's some type of business where you could do something monthly, then you can get up to 12. So then you're talking, maybe $10,000 to $20,000 write-off over the course of a year. But you got to filter it down to the client you would even bring it up for. And for me, that's more the ones I bring it up to are the service-based, client-based, real estate agents, financial planners, things of that nature, consultants.
So team-based, like even if someone has vendors or they bring people together, they bring teammates together for a retreat or something like that. So
for a retreat, yeah, and then that would be and then the additional level would be is if they have employees, then you could have a company meeting that company retreat that night, or maybe a day or two. I did have a client that he had which I busted him on anyway because and this is where too is they actually have to do it. So I had a client that had a cabin up. We did the books for the company, but there was a different CPA that did the tax return. And he was reclassifying distributions as rent twice a year for the company retreat. And one of them was on a day that I was at the office and everybody was there. They were doing these 3-day retreats up in Big Bear and renting it out at like $2,000 a night for his cabin. And, I had to sit him down and say, hey, everybody was in the office. Everybody has emails going out, everything else. Like, there's no way you could prove that this event even happened or anybody went. And then if you've got an auditor ask your employees if they went or if this event even are you going to ask your employees to lie for you because you're getting audited? And so that's where you need to bring up to your client that these things really need to happen, because you can't expect anybody to lie on your behalf, things of that nature. And so they were saying there's company retreats 2-3 times a year and renting his cabin out, which is a great idea if you invite your staff up to your cabin for a company retreat, and then rent it back to yourself, sure. But everybody's got to actually go.
So eligibility wise, then we're looking for legitimate business use. And typically it's going to involve other people or hosting some kind of an event, either clients, customers, or team members, or some combination, right? And then you have to actually do it, not just imagine that you could have done it. And then you mentioned that we also would need to, either we or the client, but I guess the client would take the final responsibility, needs to establish some kind of a reasonable value for the rental.
Correct.
And then
you want to have backup.
And then it has to be,
value.
and then it can't be more than 14 days throughout the entire year.
Correct.
So that sounds like the initial sort of eligibility of whether someone's looking at actually doing this, and those are the boxes that we need to check, right?
Correct.
Okay. So let's say that happens, right? Let's say you check all those boxes. At this rate, it might even be a client, right, Darren, that they heard about this on the internet and they went and did it during the year, and they were, or tried to do it, and now they're bringing it into us to kind of get it administered, right? So in terms of administering it, so at that point, I'm going to enter a rental expense on the company tax return, and on the personal tax return, am I going to issue a 1099? Am I going to report that anywhere on the personal tax return? What do I do on the personal return?
On the Augusta Rule, I don't report it on a lot of them. A lot of the times you can put it on as rental income and then deduct it as an expense, and then cite the IRC code on it in a note.
And is it acceptable to, because, my policy, if I don't have to do something, then I try to not do it. So it's kind of like a little either or type of scenario. So what if I just don't put it on the 1040 at all? Is that
at all? Then
am I a bad person?
I don't think you're a bad person if you don't put it on at all. There's not any requirement that says that you have to put it on and take it back off.
I thought that was the whole appeal to it, is that you don't have to report.
Correct.
For that.
Yeah.
I mean, you report the expense on the.
Yeah, the only time that I've ever reported it is when it's through a third party, like from a movie production company or something like that, and there's a 1099.
Gotcha.
Thanks so much for joining us. We really hope this session was helpful for you. If you enjoyed this and want more support on your tax professional journey, consider joining one of our Pronto Tax School memberships. As a member, you get to join weekly live mentor sessions just like this, access tons of advanced tax courses, be part of our private member groups, which is great for networking, grab special discounts for our live events, and even get tax business growth coaching. There's a lot packed in. Check out the links in the description to see the details for our Dream Team and Forever Edition memberships. We'd love to have you join our community.